It's about that time of day again. My name is Joseph. Wednesday evening, May the 30th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish with a big spike in range pattern. So my plan is to look for buying opportunities below the range lows tomorrow morning. But I gotta be honest, I have my eye on a key battle zone level waiting for a triple whammy of support levels tomorrow morning. The S&P is also bullish and trading at the high of a trading range tonight. That tells me to look for buying opportunities using seller failures down below the low of the range tomorrow morning. Boy, Nasdaq is sloppy and range bound today, but a recent wedge pattern tells me to stay patient for buyer failures. I want to see that wedge break down before I start selling back into the range tomorrow morning. Gold is also range bound with a big triangle pattern, and my plan is to fade the breakouts, keeping my eyes on the extremes of that triangle on gold. Make sure you stick around for that chart. Very interesting lesson on gold later on in tonight's video. Euro is bullish with a strong move higher, and I have my eyes on buying opportunities down near the low of a hidden channel tomorrow morning. Well, we got the end of the month. We got some big news just around the corner and some really big moves in today's session. Got a great newsletter in store for you guys and gals tonight. We got some ranges, some channels, right? Lots of reliable opportunities setting up for the final day of May. Before we jump in to put together the plan for Thursday's session, though, I do need to remind you, if you're watching me this evening on the YouTube channel, you can find a detailed description of this entire trading strategy. It's written right here on my blog at sidewaysmarkets.com. Just scroll down below the video and you'll see all the text. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over to the Sideways Markets blog. This is where it all happens every day. I'll put the link in the description of the YouTube video. While you're here on the blog, right, enjoying all the content, please don't forget to join our mailing list. I'll send you an email every time we publish something new. In the lower left-hand corner, also remember, if you're on social media, I'm always posting charts, links, updates, quotes, videos, you name it. If it's trading related, right, if it's success related, if you love my nightly newsletter, right, you'll love following me on social, right, grab that social media in the lower left-hand corner and I'll see you online. And then don't forget, all the charts from tonight's video, you can have all the charts on your computer for tomorrow. Follow that link below the video tonight and grab those charts so you're ready for tomorrow's trading session. And speaking of tomorrow's trading session, upper right-hand corner, grab that free pass and come out and join me as a guest in our trade room as part of our free trial. Get a great free pass in the upper right-hand corner. If you're not a member of School of Trade and you'd like to come out and learn more about how we use our strategy every day in our trade room, grab that free pass in the upper right-hand corner and I will see you tomorrow in the trade room. Any questions, hit me up on live support. You can always call the toll-free number right on our website or post some comments in the comment section below, or I'm here on live support to answer all your questions there as well. All right, hope you guys are having a great day out there. Man, what a Wednesday it's been so far. Get some big moves and, of course, some big news here setting up for tomorrow. Tomorrow, right, Thursday, May 31st, it's the last day of the month. And, of course, we always talk about as we go into the end of the day, the end of the week, the end of the month, traders start taking bigger risks, combine that with lower volume and liquidity, right? And we get more volatility in the market. So we always expect to see a bit of an increase in volatility as we go into the end of the month. Now, the markets have been a little bit slow this week, right, for the early part of the week here so far. So we'll see what tomorrow brings. But typically, there is a little little dose of extra volatility that sneaks its way in on the end of the month. Also important to see tomorrow, we've got some pretty big news tomorrow, right? We got some personal income numbers at 8:30. We got inflation numbers from the Chicago PMI tomorrow, right? We got the pending home sales index around that 10 o'clock top of the hour. And of course, if you're a crude oil trader, we have inventories at 11 o'clock Eastern time. The big news tomorrow is going to be that, right, going to be that time between 8:30 and 9:45. Jobless claims is not a very big, it's not a market moving event anymore, but personal income into Chicago PMI, those will be, anything purchasing managers index, anything that addresses inflation, right? The Fed will have to step in and manipulate the money supply, right? Take money out of circulation to cool off inflation, right? Put money into circulation, right? To spur inflation or to encourage, right? Investment, right? So we do expect that to be a major market moving event tomorrow morning early in the session. I would also keep an eye on the petroleum status report, especially for all you oil traders out there. Tomorrow, of course, being the normally the inventory report is on Wednesdays, but because Monday was a holiday, they pushed back the normal Wednesday report to Thursday at 11 o'clock. So keep an eye out for that. It should be pretty much a full session tomorrow if you're trading oil. 10 o'clock, 10:30, 10:45. We should be able to squeeze most of the session tomorrow morning, right? Squeeze a little bit more out of it tomorrow than we normally do on an inventory day. But be aware, though, after 10:30, 10:45, you want to really have a good reason to be trading oil just because you've got that big weekly inventory report coming out at 11 o'clock Eastern time. It's also important to remind you as well, tomorrow afternoon is probably not the time to be trading. Probably not the time to be taking much risk tomorrow afternoon. It's the end of the month, right? And it also is the afternoon leading into Friday's non-farm payroll number. The weekly payroll report, monthly payroll report, the jobs report on Friday morning usually means the afternoon prior is usually relatively slow. When you combine that lower volume with the increased volatility that we typically see around the end of the month, it's probably going to be a good idea to be extra careful, right, tomorrow afternoon as things do tend to get slower, right, ahead of that monthly jobs report. But again, combined with the volatility of that end of the month, it could be some fireworks, right, unpredictable, unreliable fireworks, I might add, at the end of tomorrow's session. So get to it early tomorrow, right, early in, not so early out, but just be aware, after 2 o'clock, 2:30 tomorrow afternoon, we definitely may start seeing this market really whip around and be almost untradeable. And then, of course, tomorrow night, we'll put the plan together for Non-Farm Friday. Non-Farm Friday is kind of a half day, right? If you recall, it's a lot of whippy news reaction and then a couple hours of trading. So we'll come back and we'll talk more about that in tomorrow night's newsletter. So make sure you stay tuned for more on that. Before we get to tomorrow night's newsletter, though, we got some work to do in tonight's newsletter, shall we? Let's dive right in. We'll go crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bullish with a strong move higher to finish today's session, finishing with a spike and range pattern along with a hidden channel. The spike and range tells me to buy below the lows of this range using the 2-try rule, while the hidden channel sets up for an added level of support. And then when you throw in the battle zone below it, right, we have potential for a triple whammy down around that 68 even area for buying opportunities early in the session tomorrow morning. Boy, the one that stands out on this chart, you can see a very, very strong move higher. I'm connecting these two highs. I'm pinning them down to those lows, and you can see the midline fits like a glove. So that's going to be our bull channel, right? In a bull market, I want to find levels of support to buy at, and whenever I have a market that just runs like this so far, I really want to try to get below the moving average. If you look at this, and again, bull market, buy at support. But looking deeper at it, you'll notice the buyers had a really easy job today, right? They pretty much stayed right above that moving average, right, all session long. That doesn't happen very often. You know, normally when we see a bull market, right, we'll see the market hold that moving average, but usually though there'll be some deep correction, right, pulling back, failing at the moving average, right, and then blasting higher. We never saw that deep correction today, and I would imagine a lot of buyers are likely going to be waiting for that correction tomorrow. So I want to find support levels that I can use in combination with, right, that deep correction, right? Again, it's a bull market. I want to find support. So first of all, we easily have the support at the low of this channel, but you'll notice it really doesn't get us that far away from the high, right? It's still not a very deep pullback off that high. What I'd rather do is I'd rather get a much deeper pullback into that battle zone to really allow me to get in nice and low so I don't have to worry about buying high. On top of that, we can also see a strong move up into what I call a spike and range. Anytime we have a spike and range pattern, there are typically two ways to trade this pattern. The first and most reliable, and I think the easiest way, is to buy down below the low of that range, and I'll use what I call the two-try rule. That means I'm looking for a strong move down. That strong move down will encourage sellers to try to sell the breakout pullback. Very, very foolish move there. Not a very reliable trade. I want to let them try that second attempt, and then once they fail, I'm looking for a buying opportunity back up into that range. Bears try once, bears try twice, and I'm looking to buy it going back up into that range. Another pattern I like to use is what I call a fake out breakout pullback, right? So we're buying off that second try, right? The next opportunity comes up above here now. Now get that moving average above, and watch closely on this. I'm looking for a two-legged pullback. It usually goes just below the moving average, right? And test the high of that trading range. That's the second right pattern I'm looking for. So again, I have what we call a two-try failure, right? A two-try failure pattern, as well as, pardon the acronym, the FOBO pull-B, right? PB, right? The fake out breakout pullback. And I have a reason why I call that the fake out breakout pullback, because the reason why is because when it makes that second leg in, a lot of sellers try to sell it back inside that range. I look for them to fail, and that gives me kind of that fake out, breakout, pullback pattern so I can buy right into the stops of those sellers, right? So that's a spike and range play for tomorrow, right? Here's that range we have, right? So one try, two try, back up, or moving average comes over, right? And we, of course, have a strong move up, two-legged trap, right? Hold the highs and go from there. Okay, so looking for that two-legged pullback above the highs, or right, looking for that two-try rule down below the lows. Now, before I finish up, I've covered a lot so far. Spike and range patterns, hidden channels, battle zones, two-try rules, a lot of terminology. I want to make sure if you're here for the first time today, I want to make sure you get the most out of our time together. So what I would encourage you to do is to really get a deeper dive into all the terminology, all the patterns that I use. Grab a free trading class in the upper right-hand corner. I want to make sure that I give you the most amount of details I can. I can't go over everything in this nightly newsletter. We'd be here for 2 hours, probably longer than that, to be honest with you. But I will take a much deeper dive. Grab that free trading class in the upper right-hand corner. Pause the video if you need to. Not to worry, I'll be here when you get back. Grab that free class. You'll learn more about the entry patterns, the trade management, right? Everything we use every day, right, in our trade room. So again, we've got that one try, two try, buying back up, right? Strength move, right? Two-legged pullback, and then go from there. So we know what we're looking for here tomorrow for the buyers, right? What about What about for the sellers tomorrow, right? First of all, it's a crazy bull market. How would we turn bearish tomorrow? Well, anytime we have a trend, for the market to reverse the trend, we need three things. We need a strength move going against a trend, strong move down in this case. We need a pullback to the moving average, and then we need another strength move going lower. I call this strength, pullback, strength. For example, we saw a good example here, right? If you recall from last night's newsletter, we had this bear market going lower. Well, what happens? We see strength, we see a pullback, and we see strength, right? Once we see that strong move higher, everybody's now buying because they know the market has turned bullish, right? So you want to give the market time to show us proof, right, that we actually have a reversal. So strength, pullback, strength. Okay, then what I'll do is I'm going to find a new channel, drawing off the lows, mark up that channel up off the highs, and usually you can find a couple opportunities between the prior swing low and the top of that channel, right up in there, right? So that will be the goal tomorrow if we get the market to reverse. And as I mentioned earlier, tomorrow is inventory day. It's not until 11 o'clock Eastern time tomorrow, so hopefully we don't get too bogged down with it. But I'll tell you, inventory days are notorious for major market reversals. So keep an eye out for that strength, pullback, strength. And again, to make sure you learn more about reversals, continuations, breakouts, make sure you grab that free trading class in the upper right-hand corner. Grab that information icon, right, and learn more right there. So we know if price goes up, we know if price goes down, we know if the market reverses. Plan looks good here for oil tomorrow. Let's keep going. How about some S&P? S&P is bullish and back inside the range from last week. Are we really that surprised? I don't think we're that surprised here. Before I start looking to sell the highs this range, I have to respect the momentum of this strong move going higher today. I would love to combine the low of this channel along with the low of this trading range. Buying the low will allow me to buy at multiple support levels while following the momentum of this market moving higher tomorrow morning. This is a great example of a scenario where we are back inside of a range. Same range from last week. That same range we kept buying low and selling high last week. Well, here we are back inside that range now. So it's an easy kind of rookie mistake to think, okay, now I'm going to sell the high of this range. The problem is, look at the momentum of this market going higher. You have to remember the markets have a really difficult time changing directions easily when they have this much momentum. And a lot of this has to do with the fact that there really there's been no way today for sellers to make money. When a market does this, right? When a market has a really lazy trend, right, like that, sellers in theory, it's not very easy on the mindset, but in theory, that sellers could sell here and make a profit going back down. In theory, right, you could actually make money as a seller if you just sold every breakout, right? Everything went up, sell it. Goes up, sell it again. When the market's relatively flat like that, you've got two sides of the market participating, right? And that means markets like that, you can sell short. But when you have a market that is moving like this, right, with really good momentum going higher, that same type of strategy won't work anymore, right? You can try to sell that new high, but look, you barely have any movement going lower. Does that make sense? Right? So it's almost impossible for sellers to participate, profitably at least, right, in a market that has a strong amount of momentum. And what that means is, because there's nobody selling, right, every pullback now is going to be ripe for a buy. So when I see this real strong move going higher, and I'm of course connecting these highs, finding this low as a hidden channel, right? I'm also combining the low of this trading range down here, right, with this, right, prior swing to kind of create this battle zone. But the bottom line, though, is whatever this market pulls back, whenever it pulls back, and again, much like on oil, it barely spent any time. Look at that, barely any time today below that moving average. Again, most of the time when we see a strong move in one direction, normally, yeah, we'll spend time above it, but we'll pull back, right, and then go back up. We never got that deep pullback. So I can guarantee you, right, and there's a lot of buyers that are eagerly waiting at their computers right now, waiting for a chance to buy a pullback. So combine this all together, right? Sellers can't make any money in this market right now, right? Hasn't had a deep pullback, right? We have a range. I can't sell this market yet, right? Because anything that moves lower is going to be ripe for buying opportunities. So I know I want to be a buyer, at least for now, right? Until we see some more information tomorrow. Maybe it sinks back into this range and settles down. But what I would imagine is we're probably going to see a pullback, right? And another leg higher here tomorrow. If we don't get a pullback, probably see it continue going higher, and we'll look for, right, a pullback from there tomorrow. So let's find some levels of support, and let's plan this out, right? Let's plan this out. So we know we have this big hidden channel, right? And you'll notice I'm kind of using the midline there, almost like a multi-tiered channel here, right? So that channel low is what I'm looking for here. So let's zoom in a little bit closer here, and let's plan this thing out. Now, I always like to make sure that I'm ready for up, down, and sideways. So let's take a look at those scenarios here tomorrow, and of course we'll look at, right, a possible reversal here as well. First of all, I'd like to pull back, right? I'd like to be a buyer somewhere down at the low of this channel, the low of that range. You know, in all reality, right, the battle zone really could be all the way down here too. You know, I mean, it could be even that, right, even that far down, right? Kind of this being, right, your kind of your prime battle zone. I want to buy the pullback, right? I want to buy the pullback. Now, it may be as simple as buying off the low of this channel. I hope that's not all we get. I hope that we get it down to the low of that range, because that's where the magic is going to happen most likely here for tomorrow. So as we pull back here, let's say we find support, right, at the low of this channel. What's going to happen is the moving average will pull back as well. Now, of course, anytime we see lower highs and lower lows, what's going to happen? Sellers are going to try to sell this short, right? They're going to think this market is bearish. But remember, the momentum of this move is so strong that although it may pull back, it's probably not going to reverse direction completely. So as the market pulls back to the moving average now, I'm expecting sellers to try to sell that pullback, right? Because it'll be lower lows and lower highs. Okay, albeit a very small picture of lower lows and lower highs, right? But there'll be lower lows and lower highs. Not enough to call this a bear market, in my opinion. So what I'm going to do is I'm going to look for them to fail, looking for buying opportunities now into their stops. Now, whenever we see a stop run, right, for the bulls, that means the bears are getting stopped out. What happens is the sellers get forced out of their positions, right? Their stops get triggered and they buy their way out. That usually leads to a lot of strength going higher. That strength going higher kicks all the sellers back to the sidelines and gives all the bulls a reason now to get all excited about buying the next pullback. Wait for the next pullback, right? And that's my opportunity. So as we pull back, it's a failure pattern at the moving average, a strength move higher for the bulls, followed by a pullback for that next leg higher. Now, I'm illustrating this tonight on the low of that channel. This could also happen if we go lower down to the low of that range, right? We pull down, bears try to sell it, right, as they go short. We know where their stops are. I'm able now to buy into their stops. That results in strength, and I can look then for that pullback, right, and buy from there. It's the same basic, again, in a bull market, buying at support. Okay, don't forget that simple sentence. Bull market, buying at support. Okay, notice I didn't say bull market, buying the pattern. The pattern is irrelevant if it's not combined with support. Okay, this is one of the big mistakes that I made early in my career. I was so hyper-focused on patterns that I forgot to make sure that the patterns had to actually be in the right location, right? So you want to buy these patterns or use these patterns off of support levels, right? Low of the channel, right? Low of the range. that's when you're going to get the most bang for the buck, right? That's where you'll have a hard time losing money, right? If you don't, it's such a toss-up. It's so difficult to trade without incorporating some right level of support. Okay, so that's the plan, right, if price goes lower. And remember, this could get ugly. This could really go lower here, right? This could really get ugly to the downside, and still one try, two try, break up, pull back, right, and go from there, right? So I want to buy low, and I love to buy the low of the channel, the low of that range tomorrow. Now, what if we go, right, what if we go sideways? You can see how we're kind of struggling to go higher here right now. If this turns into a trading range, okay, you now know the plan, right? One try, two try. We talked about this on oil, right? You guys in the plan now, if this turns sideways into a range here, one try, two try, failure back in, or fake out, breakout, pullback. Remember that two try, right? That two-legged pullback, right? That fake out, breakout, pullback. Either buying below low, right, or buying that high. But remember, get that moving average up above that range. That's the key, right, to being a successful breakout pullback pattern. That way you know you get enough strength going higher here. Now, what else do we have? What if price goes higher here, right? What if we just break out going higher? If we break out going higher, not a lot, right? Not a lot changes here. If we keep going higher here, right, if we keep going higher here, at this point now, it's all hands on deck. I'm looking for traps. Right? If we don't get a deep pullback, that means there's something else happening out there. There's a short covering rally happening where, you know, sellers who are in long term will be forced to the sidelines. I'm going to look for traps. I'm looking for seller failures, right? I'll look for mainly what we call a trap low, right, down below a prior swing. So if this thing keeps jumping higher here in the overnight, into the early part of tomorrow morning, stay patient, wait for that deep pullback, right, and then buy from there. Remember, we're expecting to see at least one more leg, right, one more leg going higher here. Why? Because of the momentum of this market. So get it down, one try, two try, buy off the low, up, trap, bring it back, right? One more leg higher before we start thinking about this market turning around, right, and going back into that range. Let's keep going. Speaking of a trading range, boy, the Nasdaq, sloppy, range-bound price action this afternoon. And while my focus is to sell back into the range tomorrow morning, this wedge pattern is clearly giving the buyers an opportunity to break free to new highs. Knowing this, I want to sell short off these highs, but I assume there will be buyers waiting below the swings. So I need to wait for them to fail before getting short, right, tomorrow morning. I'll tell you, the Nasdaq looked completely different than the other E-minis. It is completely different, by the way, right? Different markets are, right? Different equities are included in the Nasdaq, right? So they will have, right, a different personality. But boy, oh boy, was this a very, very different personality. The Nasdaq literally couldn't get out of bed this morning. You'll notice here. I mean, look at the difference between this chart, right, and that last chart, right, on the S&P. I mean, it's obvious, right? So the Nasdaq really struggling here right now to get itself away from that trading range. There are really two big components on this chart. One is the range. This is the exact same range from last night's newsletter, right? You can see how choppy it's been around that trading range, right? So that trading range tells us, right, as we always do, we're looking for that one try, two try, failure back in. We have one try, we have two tries now for the buyers, and I'm looking for the move going back down into that trading range. The second, and I think the most important clue here tonight, though, is this wedge. You can easily see we've got highs marked up, lows marked up, and you'll notice how, right, it gets narrower. So let's talk about this, and then we can kind of bring it back in and see how we can use it to earn a profit tomorrow. Anytime we have a bull wedge, okay, wedges are really, I don't want to say they're rare, but they're not as common as a channel, right, or a trading range. The most important thing you want about a wedge is that the buyers are trying to get to the vertex, right? They're trying to get to wherever those two trend lines, right, come together, right? So these two trend lines, right, wherever they intersect, right, that's going to be, right, the vertex, right? That's where they want to get to. Okay, so as we go higher here, what you want to remember is that when the range or when the wedge is really wide, you'll have traders trading inside of it. But when the wedge gets really narrow, as you get closer to that vertex, right, the wedge starts getting a lot narrower, right? And when it gets narrow like this, nobody feels comfortable trading inside the wedge because there's no space, right? There's resistance right on top of you at the high of that wedge. So what happens is we usually see, right, a strong correction, right, a strong pullback. And the reason why the market pulls back is to simply free up space, right, for them to be able to go, right, back up into that range again, right? Remember, right, as the, if I can get my, there we go, right, as the range is wider, as the wedge is wide, you can trade inside of it because it's room. But as that wedge gets narrower and narrower, now we have to widen things out to give those buyers reason, right? To give them some sort of incentive to be a buyer here. This is where things are going to get into trouble tomorrow morning, right? Again, I want to sell back into that range. Okay, so when this thing pulls back like this, I cannot try to sell it because you know what's going to happen, right? It's going to suck right back up into that wedge, taking my money right in the process. So now let's go back, look at the chart again, right? Here's that wedge. Okay, so how am I going to get short off the high when I know that there are going to be a lot of traders here who, now that we're getting nice and narrow right now, right, it's probably going to pull back and then run right back up again. So how do I do this? Well, first of all, you could say, you know what, Joe, heck with the range, I'm going to buy that pullback. And that is an option. If you want to buy that pullback, an option is it'll be a failure. What'll be is a failure strength pullback. One try, pull back, two try, failure into strength, strength into pullback, and pullback back up again, right? We see this all the time. You can see it right here. One try, two try, strength, pullback, right, back up in. That move happens all the time. So that would be your option tomorrow, right, if we can see a failure. What might be a more conservative, more responsible, more reliable way to do it is instead of trying to buy that failure, wait for that strength, right, and buy the pullback from there, right? That might be an easy way to hedge yourself against this thing collapsing right back down into that range. What I'm looking for here is for a sell side tomorrow, right? Again, we'll look for that as the buy side tomorrow, but for a sell side, looking for is a strong move down. We've got to hold the pullback now, right, and make that run lower. Now at that point, now we know the gig is up, right? We know the wedge is broken down and the range is still the king. At this point now, find that new channel off the lows, mark up to that high, and normally what's going to happen is you're going to find, right, a little spot right there at that prior low. We can look for that sell up above the high of that range, right, and back down. You'll notice I'm not trying to chase the market lower as it goes lower. I have to let these buyers try, let them fail, and then wait to pick my spot here as we go, right, as we go back up overhead. Hopefully that makes sense, right? So two real options. One would be the failure, strength pullback back up, right, for the buyers going back up to retest that high. Second option, one try, two try, successful, right, sell up off that high for a move back down into that range, right, tomorrow morning. Now, what if we keep going higher here tomorrow, right? What if this thing just blasts higher here? If it blasts higher here, keep an eye out for a new channel, right? Because this is a wedge right now, but you know, if it blasts higher here, oftentimes wedges develop into channels and we can look for the pullback, right, later on tomorrow in the session, right? Just don't chase after it. As you can see, I'm a big stickler against buying high or selling low, because it requires you to use a lot more risk to stay in that trade, right? If I buy nice and low, I can use a small stop loss to protect my capital. If I buy as the market's going higher, I have to ultimately use a wider stop if I want any chance to be able to absorb any pullbacks. So that's the plan here for tomorrow. Remember, if we do collapse all the way back down, one try, two try, back in. Remember, one try, two try, back into the range, right? And again, one try, two try, and then up back into that range on the Nasdaq here for tomorrow. Okay, really, really easy plan on the Nasdaq. Just got to respect this wedge for tomorrow. Yeah, well, the easy stuff is over with, because now we have the gold. Gold is range bound with a triangle pattern, telling me to focus on failures up around the extremes, the triangle, with targets going back to the middle of the range tomorrow morning. Keep in mind, here on gold, we did roll over, and I apologize last night. Rollover on gold always seems to be a moving target. I swear they make this stuff up as they go when it comes to when to roll over on gold. Obviously, I'm joking with you, having fun with you on this, but if you ever can't go to bed one night, can't go to sleep at night sometime, right? Go to the CME website and read the rollover rules for gold, and you'll get 2 sentences in, you're like, what the hell are these guys talking about, right? It's almost like they wrote it in a different language. But the bottom line is, there's always a little bit of again, it's a bit difficult to anticipate exactly when gold, right, will roll over. We did roll over, right, last night into the 818 contract, so I do apologize for not giving you the heads up on that yesterday, but it was pretty easy. When it came out this morning, it was pretty easy to see that the 618 contract was no longer trading on any volume, and therefore we move over to the 818 contract from there. So rollover now on the 818 contract. We've got some lower highs, we have some higher lows, right? That creates a triangle. The triangle tells me mark up the middle, try to sell high, back to the middle, try to buy low, back to the middle. Now, this is very similar to a wedge in the sense that when we have a triangle pattern, when the triangle is really wide, I can trade from top to bottom, bottom to top, top to bottom, right? But when the triangle gets really narrow like this, we have to start thinking about some sort of move, right, outside the range, just to be able to free up, right? Just to free up the open space we need for some profit going back in, right? It's as simple as that. And that's a simple mindset shift. You know, I remember learning about this many years ago. I can't recall exactly which one of my many mentors along the way told me this, but he basically said, think about it, right? If there's limited space to make profit, do you really think experienced traders are going to participate in that, right? If there's only a little bit of profit potential, right? Put yourself in the shoes of someone who's been doing this for a long time, right? They're sitting at their desk, they're watching for patterns. They're wise. They're not going to take every single pattern just because it's a pattern, right? They're going to make sure they take the patterns, right? Buying the low, selling the high, buying the low, selling the high. But once there's no space in here, the professional traders, the ones that really move these markets, the ones that we want to be trading with, right, they're going to shy away from trading inside of really tight, cramped spaces, right? So once this range starts getting really narrow here, now we want to start looking bigger picture. Mark up those extremes and wait for a break out of that range. Right? What I'll do is I'll mark up, right, this is the battle zone above, this is the battle zone below, and I want to go down, back up in. I want to go up, back down in, and the target is right back in the middle, if I can get it to be the middle there for you, right back in the middle, right, of that triangle. It's tough to predict which ones will go all the way through the middle, so I always try to just simply buy the low and sell the high, going back to that middle. Again, the key is once we see the triangle get really narrow here, nobody wants to trade inside that triangle. So now what I want to do is I want to mark up those extremes, mark up those edges, and see if we can get ourselves out of this area and then back up in. Now you'll notice right now, very sloppy today. I mean, today was a Today was almost a forgotten day today on gold, and I'm sure most of it was because of this rollover, this kind of unexpected. And again, not unexpected. I'm sure if I took the time to really master the art of rollover on gold, I'm sure I would be able to find some scientific formula to give you guys. But again, it's pretty easy. Once you see the volume is pretty low, you roll over to the 818 because the volume is higher there. The bottom line though is today definitely felt like it suffered from a little bit of rollover-itis. And so I'm looking at this now as being a strong move up. I want to see another leg going higher so I can then try to fade this market back down into that range. Get up outside of that range. Up, up, failure, strength, back down in, One try, two try, failure, strength, pull back, back up in. Stay away from that middle. Get it up, failure, back in, down, failure, back in, Keep looking for those one try, two try, One try, two try, moving average comes over, failure back in, pull back in, Looking at failure patterns, looking for pullback patterns, again, away from the middle of that range, on the gold. And I hate to say this, as we go into the end of the month tomorrow, hopefully that inflation data and home sales numbers will move these things around tomorrow. But if we sit right in the middle tomorrow morning, it's going to be a sit on hands of a morning, We don't want to be trading it around that middle. So I think a lot of the reason why things were almost lifeless today was because there just isn't any space here, There's too much support coming down below to sell, There's too much resistance here to be a buyer. So we're going to keep waiting here to see if this gold will grow a pulse and get outside of that range for us tomorrow. Wrapping up tonight, boy, it's already 40 minutes into this video. Euro wrapping up tonight. Euro is bullish with a strong two-legged move higher this afternoon. And with the test of the short-term measured move target, my plan is to look for buying opportunities down at the low of this hidden channel tomorrow morning. This is very similar to what we saw earlier on crude oil and the S&P. We have a very strong move higher, A one-leg, two-legged move, up into that measured move. This is the minor measured move. I'm also marking this up as a larger measured move up to that 17,400, which, by the way, is right about where this week began, Remember, this coming out of a holiday weekend, Oftentimes, when we have a holiday, price will move away from the holiday price action and then snap back to where the day or to where that holiday price action, began. So as we go higher here, those are our targets. We're sitting right at that minor measured move right now. I've got what appears to be a spike and range pattern, which you guys know how to trade now, One try, two try, or fake out, breakout, pullback pattern, Same plan we talked about oil earlier on oil, Buying the low, or buying the high, on that breakout. I'm also combining these highs, bring it down to that low, and boy, oh boy, is that a beautiful fit for that channel, So the market's clearly bullish. I'd like to be a buyer off of that, off of that channel, and that, of course, exactly why my battle zone, hugs the low of that channel. So really at this point, the question is, we've got that measured move that's clearly acting as resistance, Do we pull back or do we go higher? That's really the big question on everyone's mind right now when it comes to the euro. And so knowing this, we know we have that spike and range pattern. So one try, two try, failure, strong move up, two-legged pullback. Again, don't forget, get that moving average to clear through, Two try, roll the range, and of course, fake out, breakout, pullback up to new highs, tomorrow. That would be ideal, if we keep going sideways, or if we pull back here tomorrow. If we just run higher, if we run higher here, I am still going to be watching for that deep pullback, trying to get in somewhere around these levels of support. And I know it's going to be tough because it'd be tempting to want to buy that high. But again, you buy high, you've got two choices. You can either keep a tight stop and get stopped out frequently, or you can use a wide stop, and hope it doesn't pull all the way back for a big loss. I would much rather avoid buying as the price goes higher and buy as we pull back to support levels, because then I can use a small amount of risk and still have a much bigger reward, right, relative to the size of my stop loss. So that's the plan here for tomorrow, right? Pulls back, I want to buy low, goes higher, I'm waiting for the pullback, right, to make sure I'm not buying high. Now, I'd be lying to you if I didn't say that it could also reverse. And let's not forget, this market is just a little bit bearish, right? It's a very long-term bear trend. So, what would a reversal look like tomorrow? Anything is possible, right? Anything is possible. A reversal would be strength, a pullback where? Pullback to the moving average, right? And then strong move through. If we get that strength, pullback strength, find that new channel, right? And we look for that sell, right, off that new channel. Okay, targets now going back down to retest those lows. So it's a relatively easy plan. If the market reverses, we just have to wait for the market to reverse. And if it does, our target's back down to that 15,000 area, down around those lows. All right, guys, you get your helmet on? Yeah, you get your seatbelts fastened. Tomorrow morning, last day of the month. Like I said before, expect to see some increased volatility. Be careful on crude oil tomorrow because of the inventory report. And again, beware tomorrow afternoon because of the Friday morning non-farm payroll number. I have covered a lot in today's trading session, right? Don't forget, grab that free trading class in the upper right-hand corner, right? Grab that information icon and grab the free trading class, or go to the website here at schooloftrade.com, right? Grab that free class right as part of our free trial. I'll put a link in the description of the YouTube video. While you're here, check out our beginner, intermediate, and advanced levels of membership, right? See what all of our members are saying about us, right? And don't forget, right, I'm always here to answer your questions. You can call me in the office. Toll-free number is right there next to my ugly mug, right? Hit me up on live support, send me an email, or drop me a comment in the comment section below. Whatever you do, though, be careful tomorrow, follow that plan tomorrow, and don't forget, we open up our trade room at 8 o'clock Eastern time tomorrow morning. I look forward to trading the strategy with you tomorrow morning. Last day of the month, we'll talk about the first day of June in tomorrow night's newsletter. If I don't see you guys tomorrow morning, be well out there, be nice to each other, will ya, and be here next time. Adios, amigos. Bye-bye for now.